Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had 2 directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Checking in on Apple. So at this point, after 5 big green days in a row, we need to be cautious to be looking for consolidation that's likely coming because it's normal and healthy after a breakout. So watching the shorter term time frames, we were a bit more weary of any kind of weakness because we knew any kind of weakness on the 5-minute chart and the hourly would likely result in a bearish reversal candlestick on the daily. So we have a bearish reversal candlestick and a close fairly close to the low of the day. And the higher low pattern has been intact now since the reaction to earnings. So on Monday, if we break 132.05, we will likely confirm this bearish reversal candlestick and break that higher low pattern. Then I'll be looking down at the lows of each day as the next support levels to be watching. So 131.12 would come next, and then 130.65. And we're just going to anticipate it's going to be normal, healthy consolidation, maybe a bull flag pattern, but certainly not expecting a dump. And volume will be the gauge for us to determine whether or not it is normal, healthy consolidation or something more than that. On the weekly time frame, there's not even really any sign of that bearish reversal candlestick. A really strong close 2 weeks in a row, breaking out. And again, as far as I'm concerned, this is blue sky breakout with price adjustments for the dividends. This is the highest price that we've seen on Apple. So next resistance levels would be 132.94, 133 psychological, 133.50. And you can use the levels that we did hit before the dividend distributions because, like I said, we don't have many resistance levels to go off of. It would all be psychological levels. So we can keep an eye on the prices that Apple has hit in the past. And looking at the shorter term time frames, the red flag on Friday came when we had the 20-period moving average support hold. We hit the high of the day, and then we saw a little bit of increasing bear volume, 3 candlesticks in a row. And when we hit a new low of the day, that was the red flag that we were likely going to see a bearish reversal candlestick form today. And then from there, it was lower high, lower low, some weak bounce attempts, and a close near the low of the day. So on the hourly time frame, we are losing the 20-period moving average support, and that level is 132.26. And the next support on the hourly is down at 130.82. So we are looking at those higher lows on the daily time frame as support levels on the way back down, and this hourly moving average support will be catching up with the pre-market trading that goes on Monday as well. So bears in control for the short term for Apple. We'll see how significant this pullback is. I appreciate you watching. Have a great weekend, and we will see you Monday.